Don't you just hate when someone pulls an old Irish exit? Or are you one of those people yourselves? Just kidding, I would never judge you or myself. And if you don't know what an Irish exit is, by the way, it's basically when somebody goes to a party and they decide for whatever reason that they need to leave. And instead of saying goodbye for the next 30 minutes, in which time they know that they will probably be convinced to stay longer, they simply bounce, leaving everyone wondering, where is Herr Schwarzenschnitzel? Well, I like to make my trades quick and dirtyless, like an Irish exit. And that's exactly what we're going to be talking about in this video, 5 ways to make your trades dirtyless like an Irish exit for super nice and super consistent profits. What's up everyone? Welcome back to my channel where we make financial topics simple. For those new here, my name's Alex Winkler, trader since 2011, founder of TradeJournal.co, and mentor to over 100 students in my new Profitable Crypto Trader course on launch day alone. During this video, I want you guys to think about a question and be honest with yourself. When do you know it's the right time to exit a trade? Let me know by commenting below. I would love to hear your thoughts and learn from you. Now, here are the 5 ways to trade like a true Irish. Number 1, never walk into a party or a trade without a plan. It could be a bad plan, but still better than no plan. When I trade a Litecoin, for example, which I do just about every day, I like to take my profits at, on average, exactly at 1.77%. I think that was just a little trade alert. I know this because I document all of my trades on TradeJournal.co. Anywho, a true Irish knows exactly when they need to leave, and that brings me to my next point. Number 2, stick to your trading thesis. There's been so many times where I've been in a trade and I'm up about 2 to 3% and I'm thinking, you know what, I'm a genius, I know this market, and I can easily get another 1% out of it. Now, that's usually the same exact trade that I get stomped out of and take a fat daddy loss. All because I didn't stick to my trading rules and I didn't take my profits like I said I would have in my trading thesis because it was a day trade and I was in my profitable range where I usually take profits. And I know it sucks to close that trade, especially when it was profitable before, but stick to your trading thesis, even when that means cutting your losses, because taking a loss or making a bad trade is completely okay, right? There's nothing wrong with that. What is wrong is not cutting your losses quick enough and taking a big loss. That is not okay. Eventually, when the conditions do allow, you can go and enter that next trade, all with the clarity in mind that you followed your trading thesis and you're not overly emotional, and that paves the way for some really, really clean trading. So now we have a trading thesis and we are sticking to it like a glue. Now, point number 3 is where really the money is at. So point number 3, and this is something I say all the time, set an ideal exit limit order. There's a countless amount of trades where the price right after I enter the trade spikes. Whoa, 2 trading alerts in one video. I think that's a new record for me. So there's been so many trades where right after I enter the trade, because I know exactly where I want to get out of the trade, I go ahead and set my ideal exit limit order right away. And I know I want to be taking profits at around 2%. I know I want to be taking profits before a shoulder or before major resistance. So that is where I'm going to be setting my limit order right off the bat, right after I get into the trade. That creates a lot of clarity for me and allows me to stick to my trading thesis very, very easily. So let's review that quickly. It's a limit order that I placed right after I entered the trade. And it's a limit order that I didn't even have to think twice about because I know exactly what my profitable trades look like. The best thing about these ideal exit limit orders that you place right away is when you are trading a waterfall pattern or a support line bounce, because that means the price is crashing really, really intensely. And sometimes when you enter that trade, just 3, 5, 10 minutes later, there's a massive spike back to the upside and your limit order gets executed perfectly. Sometimes just a partial execution, but oftentimes fully executed right before that former shoulder that we're going to talk about in a little bit. The beautiful thing about that is you get out and before you know it, the price is back down here. You could re-enter a trade. I wouldn't really recommend it usually, but you are already out of that trade just like that, and you will never have the opportunity to do that live and wait for the price to come up there, because if you look at the charts and if you are in the Discord private trading chat room or if you watch any of my weekly trade reviews, You will know this because I am oftentimes yelling or freaking out because there is just a quick spike to the upside. I get out perfectly, and then the price is back to roughly where I entered the trade. So it's a beautiful thing. Sometimes it's really nice with certain trading patterns, but oftentimes the whole goal of setting ideal exit orders is simply to follow your trading thesis very, very closely. And it gets you in the mindset of always thinking and always knowing where your ideal profit-taking area is. So when the price actually does get there, it's not a guessing game. It's not just like, maybe I'll just hold on to this a little bit longer. It's no, this is where I want the price to be. I'm out of this trade. See ya. This also works very, very well with swing trades. On my last video where I talk about the difference between day trading and swing trading, I go through 4 real swing trade examples of my past swing trades, and I show that I had limit orders waiting, and that is when the price sometimes, overnight or something, spiked up, exited my limit order, and then went back down. Sometimes, obviously, I sell too early and the price keeps going, and I limit my upside a little bit with that, but that's completely fine because that is my trading strategy. If I wanted to invest in something, that is a whole different story. Right now, we are sniping and following our trading thesis to the T, and that is the glory of the old Irish exit. Little side note, remember to share this video with your trading buddy, mainly so they know that you are their trading buddy, or at least you think that they are, but also because you want them to be aware of what an Irish exit is. So point number 3 was set an ideal exit order, and point number 4 is find a shoulder, which kind of builds off of setting an ideal exit order, and I already talked about it just a little bit in the last point. Remember, shoulders are good. Always train your mind to be looking for a shoulder. Now, what is a shoulder exactly? It's basically when you look to the left on a chart and all you see is empty space, and then eventually you're going to find a place where there was previous price action. It might look something like a little consolidation price action right here, and then before you know it, a huge price drop off, and then all sorts of weird stuff happen. And then eventually the price comes back. So now you have this gapping area in the middle, and then you have a shoulder here, and then you have where the price is coming up to. Oftentimes at these areas is where there is a lot of limit orders waiting to be executed, or people are trying to either take profits or get out of a trade that is now back to breaking even. So there's usually a lot of resistance in those areas, and they oftentimes act as pivot zones for price action. If you want to learn more about shoulders, make sure to check out any of my weekly trade reviews or any of my other videos. I'm quite a sucker for a good looking shoulder. The last point in the old Irish exit trading strategy is point number 5. Take your profits and move on. Get out. Once you exit a trade, chill for a second. You don't need to get right back into the market. Rarely do you ever need to get right back into the market unless the volume is really crushing it and there's some really nice trading patterns that sometimes feed off each other, which again is rare. It's really easy to make a quick mistake, so don't let your unplanned second trade or follow-up trade mess up your well-planned and well-deserved first trade. Remember, one trade a day at 1.77% keeps the job away. If I lost you at any point along the way, make sure to check out the link at the top right, because I'm going to be telling you everything that I do to make an extra $1,000 per week day trading. And if you're on Twitter, let's connect. I'm not gonna lie, I'm pretty new on Twitter and I'm not really big on social media in general. But out of all the different social media platforms, besides from YouTube, which I love, I am really starting to like Twitter, some really good stuff on there. So if you want to start doing more Irish exits, give this bad boy a retweet. Always have an end game in mind, even if that requires an Irish exit. Now, if you want to learn more about making awesome trades, make sure to subscribe and hit that bell icon too, because in the next video, we're going to be discussing how to start trading with little money. Follow me on Twitter, Instagram, or both. I would love to connect. And if you'd like to do a collaboration, that would be super dope. Like always, I left my details in the video description below. In the meantime, I highly encourage you to check out these videos because I love trading and my goal is to show you how easy it all really is. You can also click here to start learning how to make an extra $1,000 per week. As always, I appreciate you guys. Wish you have a great day and make some awesome trades. Stay safe. Till next time. Ciao, ciao.